Hey everyone, it's Nick with Us versus Herd. If it's your first time here, hit the subscribe button. If you're not yet a member of our free options trading group, you can hit the link below. Also, I have the link below for our Discord channel as well. If you're not a first-time member and you join us every day, thanks for being part of the UVH fan. Definitely appreciate you. Thanks for watching. Thanks for being a subscriber. Thanks for being a part of this community. It definitely really means a lot to me. I didn't get to do a live stream today, so I wanted to do a quick recap since today was so eventful, in terms of how the S&P, the Dow, the NASDAQ, the whole stock market as a whole moved, just to kind of give you my thoughts on that, walk you through a couple of my trades that I did today. Today I did post on Facebook and in our Discord. I'm up 168 in realized, and then on the day I'm up 262. So I realized 168 today, and we're up 262 on the day. So I left some things on the table. And as you can see, it was a pretty. I didn't do a whole lot of orders, but I did clean up my portfolio a little bit, and also knowing that I was going to be gone today, I did have a doctor's appointment scheduled for today, so it was probably the wrong day to have a doctor's appointment scheduled. But sometimes that's what happens. Life gets in the way. You still got to live your life. The market's open. You still got to live your life. You got things to do. You can't be suckered to the screen 24/7. You still got to live your life. You still got things to do, things to accomplish. So. And today was just one of those days that the market really moved, and thankfully I had a great plan set up beforehand. Across all my accounts, we're up roughly $600 to $700, $650-ish, I would say, across my accounts today. So it was a good day. I'm not complaining. There's a lot of people that lost today. Not complaining at all. Probably could have been way better, but also you have to be very careful when you're trading like really big events like this, especially like beginner traders. If you're looking at the S&Ps today, this chart is kind of messed up now that happened. But like if we just kind of zero in on today, or even go, let's just look like the last 2 days here. Okay, so this morning we pretty much opened up flat, and then we ripped up higher, pretty high, pretty fast. Like in the first 45 minutes, the S&Ps went from 25.45 all the way up to 25.70. So it ripped pretty big, and then we were having some consolidation. My main concern today was that we were reaching the highs from yesterday. So, people were getting all excited that we're extremely bullish. We're going to load up on calls, and like you can definitely make a case for that. Like if you're looking at, if we just get rid of that, like, so when we were looking at it, yeah, we could see like, a week ago, 5 days ago, it was 26.85, and now it touched 25.29, and it looked like it wanted to make a recovery, even though yesterday we gapped up, and then it gave all of it back as well. We gapped up, hit 25.73, 25.75 area, and then we came all the way down to 25.29, 25.28 area. And the one thing that you have to be very careful about this market right now is being suckered in long. And for beginner traders, that's definitely the case. Like a lot of beginner traders, especially if you haven't traded an event before, like the rate hike, whether they do the rate hike or not, it's an event. And if you haven't traded an event or know how these go, because really it's a coin flip. We had a pretty good idea, that they were gonna hike the rates up a quarter of a point, but at the end of the day, they could change that. There was news articles this morning on like Market Watch and CNBC saying that it was like a 90% probability. Now it's only a 66 chance that we're going to get a rate hike. So a lot of news out there that was kind of playing with your minds. That's why you gotta take it easy, especially if you're a beginner trader. Just take it easy, take it slow, and don't get too aggressive, because a chart like this will definitely mess up your account if you're not hedged properly, if your account's not balanced, if you go in there, if you got really excited the last couple of days and you were bag holding calls from yesterday, and then you got really excited today, and let's say those calls came back to break even or as a small loser, now you're losing on that. Like a lot of people bought calls yesterday too that are holding the bag right now, which is it's unfortunate, but it happens because people think that like the reverse is going to happen. And in terms of the S&Ps, we've been on a bearish decline since we hit 2940, double topped here 2940 back in September and October, double top 2940. And we've been having some whipsaw action. I'm not saying calls, being a bull hasn't made you money. It made you money when we were peeing between 2600 and 2800. But now that we're below 2600, like I've been saying for the last 2 weeks, if we go below 2600, we're going to be in real big trouble. And now we're just free falling because there's not any support here. There's no support. Right here, I mean, we're at 2506. We closed at 2506. We went under 2500 today. We haven't seen those levels since, let's see here, September 2017. And really, since September 2017 to January, early February, excuse me, January, early February, we pretty much just went straight up. So there was no support from like 2,500 all the way up to 2,900, and now we're paying the price. That's what it is. And I don't know if you guys remembered, and when Trump started laying in tariffs, he was saying, it was an interview I think on CNBC or wherever. Trump was saying that he feels comfortable introducing tariffs because we're up so high. We had like a 30% plus return year on the S&Ps last year in 2017. So he felt that he has cushion to do what he needs to do. But now he's starting to feel that pain, and we do have a lot of cushion. 2 years ago we were at 2,200. Now we're at 2,500. We went all the way up to 2,900. So that cushion is getting a bit smaller here. We still have cushion, but what I'm saying here, 2,500, there's no support. This could easily come down. 2,300, probably consolidate 2,300, 2,400 consolidation. That's what I see. I'm not saying that's what's going to happen. That's just my opinion. But so far the charts haven't been lying. Ever since we broke below 2,600 here, it's just been free falling every single day. The bulls have not been winning. They've been faking you out, and yes, we can have a green day here and there, but even like in 2017, the trend is your friend, and right now the trend is broken. We have a bearish trend. The bullish trend is now broken after for the yearly. It did look before we got into October, it did look like we were going to maybe recover after our February session where we just dropped unexpectedly, and then we started looking like we were going to recover up until October this year. Then we're just back down to new yearly lows. So for what I'm seeing today, like a lot of people were suckered in, definitely, and I know people that were in our trading group. We're also making trades before the event. Like if you're a new trader, be very careful about making new trades before an event. Like today, I took off my winners in the morning because I knew that I was going to be gone. I knew that I wasn't going to be able to handle my risk. If things got really crazy and these positions started going against me, I was bullish. I had a bullish position on Microsoft that I closed out at 9 this morning, so 30 minutes into market close. Then I also had a bullish position on IBM that I closed 30 minutes later. And the reason why I close those positions, if we bring up IBM up here and then we bring up Microsoft, the reason why I closed, I only made 20% gain. And when I say only made, I'm very grateful for the 20% gain, sure. But, at open today, if we're looking at Microsoft and IBM, before we get into the drop part, this morning IBM went from 116 all the way up to 119. I was holding a 119 strangle. I had a 119 calls and 114 put, and this just ripped. And then same with Microsoft. We went from 103 all the way up to 106 within about an hour and a half. IBM went a lot quicker before it started to just kind of stabilize. Microsoft kept ripping. But I was thinking in the back of my mind, okay, I've been having a hard time making money on bullish positions, and now I'm making money on a bullish position. I'm going to take that risk off. I'm not going to be able to manage that risk later today because I'm going to be at the doctor when the Fed minutes come out. I don't want this position to go against me. They expire Friday, so you always have to manage your risk on, your schedule, whatever your schedule allows. Just because you're in a trade doesn't mean that you can manage that position. So when those trades start to make money, I kind of evaluated them and said, okay, well, I'm not going to be around later today. I'm going to take the risk off. I'm going to, bring the cash in, and you can always redeploy. Like people get tricked. Like, I only made 5% or 10%. Bring the cash in, redeploy. Bring the cash in, redeploy. Collect the profits, redeploy. You can always make a new trade. Yes, you're gonna have to set the trade up again, which is work. I get it. But at the same time, you're protecting your capital. That's the number one thing. Protect your capital. Protect your account. A lot of traders today, I guarantee you, a lot of traders today blew their accounts up trying to catch the knife, or bought calls yesterday and then got greedy. Like if you bought calls yesterday and got greedy because you thought we were just going to blow up to like 2,600, and you didn't manage your own risk, you definitely learned some lessons today. I mean, I feel bad, but at the same time, you had the chance to get out and you didn't get out. And then, you knew an event was going to come that was going to potentially ruin your trade, and you went ahead with it anyway. So you learned a lesson. You're going to, hopefully people learn from that and are able to take that with them. Hopefully they're able to learn from their mistakes and move ahead. Nobody's perfect. Nobody times trade perfectly. I mean, I left a lot of money on the table today on IBM. So after I took off IBM today, I then opened up another strangle on IBM that was a bearish strangle. So I flip-flopped. I went from a bullish strangle to a bearish strangle, and I opened up a new strangle today at 10:44. I bought the 119 put and the 122 call. I was mostly playing the 119 put. I really wanted to go down versus go up. And then, we got that return. I was able to close out that position actually on this drop here. Definitely left some money on the table. But about 3 to 4 hours later, I closed that position out. So I bought it for $1.54. I closed it out for $2.35 here. Sure, I mean, not an amazing gain, but I mean, pretty good for only 3 hours. Actually, I got a worse feel on Tastyworks. I got $2.50 here. I only got $2.35. But when the market's also moving like this, you have to understand when the market is moving like this, and there's a lot of volatility, you may not get the best option pricing, and fills may be difficult because when you put the order in, the price is changing so rapidly. Like a lot of people are probably having difficulties executing orders at the price that they want. But at the same time, they may have gotten better pricing as well because it was dropping so fast. So if you had puts, you were able to probably get a better fill. In this case, I probably closed Tastyworks out when I was ripping down, and on Thinkorswim, it was ripping up a little bit. So, there was a lot of back and forth action. I mean, this chart looks like it was going straight down, but I mean, if you look at these bars here, yes, we went straight down, came all the way down to 116, went back up to 117. I mean, that's huge. Look at the volume down here on some of these. I mean, IBM, not like a huge volume, they're not like super huge volume, but they're not trading in the millions, but for IBM, you can kind of see where the volume kind of spiked here. But there was a lot of whipsaw action. The prices were going both ways at one time, and as you can see here in the S&Ps, we went all the way down. We hit this is the 15-minute chart, so we went from 25.17 all the way down to 24.88. And just to put that in perspective, that's a almost 50-point move. That's a 40-point move in 15 minutes going back and forth. And a lot of days like in 2017, S&Ps moved 3 or 5 or 10, 15 at the most. Like volatility was super low. This just moved 40 to 50 points in minutes. So, leaving money on the table, no one's going to be able to time the market perfectly when this, because and also like catching the knife is also very, very dangerous. Yes, you can make money on puts on this very easily, but you also, because of the whipsawing action, you don't know where you're going to lose. That's why a lot of beginner traders, they lose money, you know, they probably were buying puts here, and then when they saw it rip up so much, they probably sold maybe even for a loss or break even or whatever the case is, but it actually just what kind of faked them out and eventually went lower. So, you know, this was, you know, don't feel bad if you're a new trader, you lost money today. This was definitely not an easy trading day. You know, thankfully I was able to profit. Thankfully I was able to protect my account, but I also played it very, very safe today. I played it very safe today. You don't want to get too aggressive on news events, you know, kind of like earnings trades. You don't want to get too aggressive. Yes, it could go your way, it could go your way big, but you could also instantly lose whatever you put in. And, you know, that's not a good feeling to, let's say you put $5 grand on the line, $2 grand on the line, or even $1,000 on the line. You put on the line and the news comes out and you instantly lose. I mean, options trading is a business. The stock market should be trading as a business, not as a casino. And the way that you stay in business is you keep making money. The way that you don't stay in business is when you lose money, and then you lose your account. So, you know, hopefully this was of value to you. You know, I just want to do a quick recap today because I wasn't able to do a live stream. I will be live streaming tomorrow. I'll do a better trade recap. I just kind of want to walk through it real quick with you guys. So if you have any questions, comment below. If you made money today, comment got paid. If you lost money today, comment learned a lesson. I'll see you guys in our Facebook group and on Discord. Join those. The links are below. Stay safe, stay green. It's always us versus herd.